Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how Bitcoin is once again looking to prove itself as a chaos hedge and or safe haven asset amongst all of this macroeconomic turmoil and just overall distress within the greater financial markets. Okay, so as I'm sure you've noticed over the past week, Bitcoin has been holding up pretty well relative to the equity indices like the S&P 500 and NASDAQ, right? As the S&P and NASDAQ sell off, Bitcoin has been experiencing a little bit of volatility, but really for the most part, it's been holding strong. And as we kick off this new trading week, Bitcoin, and of course Bitcoin miners, we're seeing green while the far majority of names in the equity markets saw red. So this is promising, this is a good sign, but as always, the question remains, can this hold up and will this price action, will this upside persist? Okay, so we will of course be taking a look at both Bitcoin and Riot blockchain on the charts today. Talk to you guys about a few different price scenarios, both bull and bear price scenarios that I see playing out, and of course where I fall on that bull bear spectrum personally. But we have to talk the macro, you guys. Ultimately, the macroeconomic backdrop and just everything going on in the macro is so relevant to price action. Technicals absolutely matter, but the macro is really the underlying force that determines the technicals. So I do want to kick it off by talking the macro, and what better way to kind of set the stage, set the global framework for the macro than by talking about how strong the dollar is right now. So we'll kick off the video by taking a look at vixi on the charts. And I also want to read over this quick CNBC Pro article with you guys titled Morgan Stanley Sees Dollar Surge, Setting the Stage for Something to Break. Okay, so I want to read over this, just give you guys my quick thoughts on the macro. I also want to reference the Trade Alert newsletter that I sent out this morning to give you guys an idea of how I'm personally navigating this in my portfolio, and it'll give you guys an idea and really preface my arguments going into Bitcoin and Riot blockchain. So let's cover the macro quickly, and then we'll dive into BTC and Riot on the charts, talk some price action. All right, so we'll just read over this, and then we can dive into vixi on the charts. So not looking good, you guys. The US dollar strength is setting the stage for a crisis as well as a looming bottom in the stock market, according to Morgan Stanley. With the greenback hitting 20-year highs against its foreign competitors, equity markets have relied on cheap currency have tumbled. It's funny, have you guys seen the meme where it's called soccer now? Because the British pound fell to its lowest level relative to the US dollar in a very long time. Soccer player, soccer guy myself, so I thought that was classic. Fears are rising. The moves in the dollar will pressure corporate earnings, and such US dollar strength has historically led to some kind of financial or economic crisis, Morgan Stanley equity strategist Michael Wilson and others said in a client note. A weak dollar makes U.S. goods and services less expensive in global trade, which is inflationary and not desirable, while prices are around their highest levels in more than 40 years as they are now. Conversely, a strong dollar makes imports cheaper, which is not only disinflationary, but also puts pressure on profits and raises questions about how much the economy can sustain until something goes wrong. The dollar's rise on Monday sent major stock market averages tumbling and brought on a fresh round of second-guessing regarding monetary policy from the Federal Reserve and its global counterparts. Quote, what's amazing is that this dollar strength is happening even as other major central banks are also tightening monetary policy at a historically hawkish pace, Wilson wrote. If there was ever a time to be on the lookout for something to break, this would be it. Okay? And as if you guys have been tuned in to the channel, tuned into the newsletters, tuned into the YouTube videos over the past 6 months, honestly, but what really feels like a couple months of going hard on all of just these fundamental headwinds that lay in the face of upside in the markets. Obviously, the dollar hitting record highs, hitting over 20-year highs, and we'll zoom out right now. But the dollar going sky high. The reason for this, of course, being the Fed raising interest rates. Do not fight the Fed. It worked on the way up, you guys. It worked in 2020, 2021 when the Fed was just dropping money from the sky and injecting liquidity into the markets, which is why we saw those rallies. Now they're doing the exact opposite. They are withdrawing liquidity from the markets. They are raising interest rates, and they are actively trying to send the U.S. Economy into a recession. Okay, so don't fight the Fed. Base case for the macro on top of the dollar, of course, works on the way up. It's as equally as effective on the way down. Okay, there's always give and take, you guys. Every action, there is an equal and opposite reaction. Physics, same thing works in the markets. There's market physics as well. Okay, so just to put things into perspective real quick, let's really zoom out. Go maybe to the monthly, even just because we're just zooming out here. Get rid of all these guys. Okay, boom, boom. Just make this a little more palatable. So we are currently at levels that we haven't seen since this candle wick right here, this monthly candle wick in May of 2002. So over 20 years is the last time we've seen the dollar at over almost 115 right now. Okay, so you can see here back in 2002, following the dot-com bubble, of course, the dollar got to a high of 120. Do I think we can get that high? It's absolutely possible. And actually, we can go back and I'll show you guys the highest levels the dollar has ever been in 84, which I've seen a lot of analysts comparing this time period to, because this is the last time that the Fed was raising interest rates at this kind of at this offensive of a pace. Okay, so the dollar at one point, the Dixie at least, got to a high, excuse me guys, of a 165. Okay, so 165 back in the mid 80s, which again is what a lot of analysts are kind of comparing this macroeconomic backdrop to, which is scary, right? Dot-com bubble, yeah, markets crash off of overinflated highs. That was 02. But we are entering a time where we're coming off of extremely inflated highs in the equity markets, along with a Federal Reserve who is just pretty ruthlessly raising interest rates. So this is it's a recipe for disaster. Honestly, you guys, a lot of you know that already. Again, we've been talking about this for a long time. But it's just important to understand, you guys, that when the dollar is going up, and this is why we always talk about it in the newsletter. This is why I figured I really wanted to highlight the dollar strength in this video. If the US dollar goes up, most assets, again, Bitcoin is the argument for this, most assets that trade against the US dollar, US equities in particular, silver, gold, direct hedges to dollar strength, will go down. Okay, dollar up, pretty much everything else down. And the reason that Bitcoin is performing well right now, and the reason that it's performed well in the past, and we'll just dive into Bitcoin right now, but I do want to talk a little bit more macro. I'll actually cover the newsletter right now before we dive into BTC on the charts. The reason Bitcoin has been performing as a chaos hedge, as it should, as Gold 2.0, as we've called it in many videos over the past couple of years, Gold 2.0, as a safe haven asset, as a finite, one of the only digitally finite goods in the world. Okay, there's a scarce amount of BTC. This is this is the single reason that made me initially invest in Bitcoin years and years ago, right? There is a finite supply of Bitcoin. There is a capped supply of Bitcoin, meaning that Bitcoin cannot be created. It can only be destroyed, making its value prop greater, right? If you can create something, that's what's wrong with Dogecoin is the first example that comes to mind. You can just print more Dogecoin. Bitcoin, on the other hand, on its blockchain, on the Bitcoin blockchain, it is coded into it. This cannot be changed. This cannot be altered. There is a finite supply, or a capped supply, once again, of Bitcoin. There's only 21 million Bitcoin that will ever exist. I think right now there's 18 million. But of course, because so many have been destroyed, it's probably capped closer to around 18 million. That's just a guess, but that's roughly what it is. Okay? So, again, we'll dive into Bitcoin, Riot blockchain on the charts, but I do want to read over this for you guys. Just the trade alert from this morning's newsletter, Monday, September 26th, if you guys happen to be watching this at a later date. Equity markets looking bad. Personally, I think more downsides ahead. And hey, again, Bitcoin could prove me wrong. Riot, one of the only names in the entirety of the market today that closed the day green. And up 5-6% at that, which is extremely impressive considering everything else is down. And thankfully, we were holding calls on Riot. So shout out to Waves Cap. Monday off to a strong start, kind of irrelevant. The bulls attempted to catch a breath as they have been for a while, but as we progress through the day, it's evident that the bears still remain in control. Another day of downside is another day that the S&P 500 becomes more oversold from a technical perspective. But the fundamental argument for further downside is so strong that it's difficult to justify any meaningful moves to the upside aside from traders trying to time the bounce, catching that fallen knife. I'll continue to say this until the correction is over. Again, I'll keep saying this in videos. This is relevant. Every micro move to the upside is only prolonging the inevitable macro downside. Every micro move to the upside is only prolonging the inevitable macro downside. And we're still a ways away from what I perceive to be the lows that will constitute an official cyclical mean reversion. So I'm holding these put options tight until we get there. Okay? So, again, you guys, money where my mouth is. I do hold calls on Riot. But these calls on Riot, which did perform well today, are pretty insignificant relative to my put options positions or my short positions, okay? So I just want to let you guys know that. On a brighter note, and this will parlay into Riot, and again, kind of just go over some videos we've made in the past on these. These are only a couple of many of the videos. And again, Bitcoin is gold 2.0. That's a real good base case video. I posted like 2 years ago now, probably close to 2 years at least, talking about why Bitcoin is gold 2.0 and why it's just a better gold and why it can act as a safe haven asset / chaos hedge. But just read over this and we can dive into the charts. All right. On a brighter note, this remains a stock picker's market. Today, Bitcoin and crypto stocks are outperforming most. It's encouraging to see Bitcoin finally breaking its near 1-to-1 correlation with equities and finally acting as the chaos hedge it's had the potential to be for so long. It's too early to say whether or not this trend will persist, but we'll be keeping a close eye on the sector, as we already do, of course. Okay, so again, you can go check these out. I haven't watched these in a very, very long time, of course, obviously since I posted them. But again, you guys, this has been a consistent theme in Bitcoin over the course of equity volatility. And this is also important to preface as well. Bitcoin over the past, and what is this, 5-6 months ago, both of these, 5-6 months ago, over the past half a year, over the course of the correction in the equity markets, Bitcoin has ebbed and flowed and had periods where it outperforms the equity market and where it does appear to act as a chaos hedge. But as we can tell from what happened in May, what might be to come, as you can see by kind of what I have listed here, I will once again give you guys the bull scenario as well. But it's important to keep in mind that although this price action over the past week, while equities have fallen and Bitcoin's it has just held its ground, is promising and can lead investors to feel optimistic around Bitcoin and Bitcoin miners, etc. This happened in the past only to be kind of shot down and see another leg down, regain that correlation with equities, and just see another leg down. Okay, so that's an important caveat. Again, you guys, if you're trading these markets, if you're not in cash, stay safe. Please stay hedged. So we've been talking about for the past couple of weeks. If you want to know how I'm personally trading on a day-to-day basis, join Waves Capital, you guys. Take that extra step. My complete portfolio and daily newsletters. First link in the description box down below. That link will take you to this page, and then click obviously on this one. Takes you to this, and you get everything that this little box right here includes. $15 a month, $40 for every 3 months. Try free for 7 days. If you want, you can always unsubscribe, but I trust you'll be sticking around. And if you do, welcome to the winning team in advance. Okay? So that's that, you guys. A little plug out of the way. Let's talk Bitcoin. Bitcoin is currently in a very, very obvious downtrend. I mean, zooming out, you guys, Bitcoin has been in a downtrend for a very long time. Series of higher highs and higher lows following this little beautiful ascending channel pattern that we were in for quite a while. Just give you guys a quick idea of what that was. Boom, ascending channel, broke below that since then in a series of lower highs and lower lows. High, low, lower high. I'm assuming we're going to go set in a lower low. This is the bottom of that low. We based out around here on 18.5. But as you can see here, I do think another leg is down. And where do I think we could go? And again, I will give my bull case afterwards. But I do think, like the equity markets, like the S&P, like the NASDAQ, like the NASDAQ, S&P, like the NASDAQ, I think this next week or two, up until potentially the September CPI data that comes out on October 13th. October 13th, right here, is when the September CPI data, or Consumer Price Index inflation data, comes out. I think until then, it's going to be pretty ugly. It's going to be pretty dark because we really there's no bull arguments, you guys. When there's no bull arguments, it's irrational not to be a bear, okay? So where do I think we're going? I mean, it's pretty obvious here. There is a strong line of shorter term support here on this descending channel that Bitcoin's now in. Touch point here, multiple touch points here, confirmed on this touch point right here. This also intersects with a shorter term trend line right here, the point of resistance that Bitcoin is currently above. So on this recent lower high, touch point here, boom, touch point right here, creating this line, broke above it, kind of crawled below it. We are currently above it, and that does lend somewhat of a bull case for the bulls, of course. But personally, I do think we will follow this similar trajectory down. I do think we will test this line of a more medium-term resistance for BTC, and both these intersect on October 7th, which also just kind of falls pretty well in line with some of my downside targets for Bitcoin, the NASDAQ, Tesla. So I do think that October 7th, October 8th, kind of the midway through the first week or maybe second trading week of October, I guess. I do think we are going to see another wave to the downside. And I do think that, again, prior to that CPI print on October 13th or the week prior, because investors will probably play some game theory a week prior to, there's going to be a little rally in the markets expecting that CPI print to be positive, which is the obviously a bull catalyst for the markets. So play the game theory a little bit. Of course, you guys always be one step ahead of your opponents. I think that come October 5th to 9th, just call it to that range, 5th to 10th maybe, we do bottom out. And from there, maybe we can bounce back. So that's the bull scenario, guys. It's difficult to be bullish on the short term, just given everything that's going on, but I do think that come like late October, heading into the holiday season, I do think things can start to turn around, because pretty much everything at that point hopefully is priced in, unless we get a black swan, which is also possible, which I mean sucks as well. But personally, I think the holiday season, Q3 numbers, Q3 earnings come mid-October are going to be tragic for the S&P. But I think a lot of that's going to be priced in anyway. And then come November, December, heading into the new year, fresh start, I think things are going to be looking up once again. Okay. But again, round this up, I do think the next couple of weeks are going to be bloody. So, Riot blockchain, I do think, all that said, and I said this in the newsletter this morning as well when we covered Riot on the charts. Also send out the price targets newsletter every morning as well. But Riot, just given the price action Riot has seen over the past couple of weeks, it does seem to me like the downside relative to other growth stocks is pretty mitigated for Riot, which means that like a lot of growth stocks, I do think, because they bounce pretty hard, can see significant downside in the case of the greater equity market, like S&P, NASDAQ fall further. But Riot looks to be holding ground. Again, Bitcoin holding its ground decently well. Riot's super oversold, so oversold relative to like their revenue and their growth rate. I do think the downside, although possible for Riot, I mean, hey, if Bitcoin goes down to like $14,000, Riot will probably come back down to like $4. But I'm remaining an optimist here. Riot looks to be forming, as you guys can see here, somewhat of a bull flag, more of like a two-wave pattern. Again, just a big way, just a big move to the upside, big parabolic bull move to the upside, followed by a descending, burping up turmeric, followed by a descending triangle pattern. I do think, once again, we come down, we'll probably test the bottom line of support on this descending triangle pattern. I don't see Riot personally falling below $6 again, but that's just me. I do think we come down, maybe crawl along the $6 line until, again, mid to late October, and then a break out of this bull flag around the peak. And again, this comes, it all times out pretty well, again, mid to late October. So I do think that's possible. Again, you guys, be prepared for more potential short-term downside, but hey, stay optimistic if you guys believe in Riot for the long term like I do. I'm still holding shares, still holding common shares that I bought back in 2017 and been along for the whole ride. So if you guys are long-term believers in Riot, if you guys are a fan of the team over there, Jason Les, the CEO, and all their operations, their scaling abilities, then pick some up and set it and forget it. But again, if you want to trade, if you want to, personally, I do my best to optimize the money I make on a day-to-day basis, on a week-to-week basis. So if you guys want to be a little more active, again, never copy me, but learn from my successes, learn from my failures, and implement those successes and failures to your own trading strategy. But you do know what I'm doing on a day-to-day basis. So if you want to know how I'm trading personally, every single day, First link down below once again. And I'll see you guys in there. Okay, we'll call that a day. I appreciate you guys watching. Until next time, always remember, take action, make waves. Peace.